Facebook is on pace for its best year since 2013 today, getting a new bullish price target to go along with that. Aegis Capital raising its target to $300 a share. It's the highest on the street. Analysts cite strong fundamentals heading into 2020. All right. Keep on counting the gains in Facebook. Does that make sense?
Yep.
$300? Yeah?
Yeah, we own it. It's our third largest holding in our disciplined growth strategy, and I like this call. The call talks about, the gist of the call is saying they're going to power through the regulatory pressure and that they're going to increase their share of advertising. We agree with both of those. It's trading at 22 times. It should have about 40% earnings growth year over year next year. We think it's really, we think this is just a powerful company with a long runway ahead of it.
And there is a belief that, companies like this in the tech space that are under fire are going to get a slap on the wrist rather than getting smacked upside the head.
Yes, clearly. And I think we had an example of that with Facebook in Europe. And it seemed as though when Facebook left Europe, there was this general feeling of, okay, it's not going to be as bad. And I think it correlated to that's where Facebook began to rise in terms of its performance. But I think you reflect back on the stock, you think about it for the decade. This is obviously, to me, the most successful IPO of the decade. I think it's 450% above its IPO price. And there have been a series of acquisitions that have allowed it to endure a lot of the regulatory headwinds that it faces. Instagram being the obvious one. And think of the contribution in terms of revenue that Instagram has had to this company in the last couple of years. It's one of the reasons why it sits $15 below its all-time high.
Just think about, you don't have to even look back the decade. Just think of this year. The beating that Facebook took in the court of public opinion and on Capitol Hill, and the stock is still up better than 50% year to date.
Right.
That tells you everything you need to know.
I don't think the sentiment around the privacy concerns has changed. I actually think what's changed is that they've shown that they can possibly monetize some of these applications that they've purchased. So if you're seeing the monetization from WhatsApp and from Instagram, that's what everybody is looking for from this stock. So they're able to put the privacy concerns aside. And if you actually get renewed strength in the core Facebook app as well, that's just kind of an extra cherry on top for owners of this stock.
Duopoly, it's not going to be broken up. I mean, that's what you have. And that's why the noise around Zuckerberg and Facebook all year long haven't meant much to investors. Every time the stock has pulled back, it's been bought.
Right. I also think Mark Zuckerberg did a really good job just taking the bull by the horns, addressing it. I think he was, people are going to beat me up for this, but I think he was pretty genuine and pretty earnest and forthright in trying to address these concerns. And I'm a Facebook user.
I mean, I'm sorry, but you could make an argument. That's a little bit much, I think. I mean, you could make an argument that they were completely clueless at the beginning of the year in terms of what the actual issues were. It wasn't a week that you could go without a new Facebook "Are you kidding me?" story hitting the tape. But
he came out, and I think they're addressing it heads on, and I think they're genuinely trying. Also, I think people are pretty aware of what the privacy is. So if I use it, I just post what I don't care everyone knowing about, right? Stuff that's public. I don't know any of my friends who actually dropped Facebook or Insta or anything else because of it. I know some people did, but it had to be minute. It's embedded. It's hard to get away from.
In general, are we going FANG as a group again in 2020? You had some, not everything traveled together.
Netflix.
In 2019. What about 2020?
I don't think we can trade them as a group, and I've always felt that for several years. And I think you've seen some breaking away. Apple's performance this year is a clear breakaway to the positive. By the way, going into 2020, I'm not bullish on Facebook, and I just take the other side of the decision that the regulatory issues are not going to matter. I think they are going to matter. I think it's going to be a piñata in the primary debate.
You don't think it was already a piñata? What's going to be the difference?
Well, I think
the candidates are talking about them.
Well, exactly. And so wait. When I was saying earlier that this year, in general, for the markets and for individual stocks, you can see a very good year-over-year return, but with higher volatility. Facebook is that name where I think you're going to see the highest volatility. Remember, this was ground zero for the 2016 election. The concerns of meddling in that election. It's certainly going to come up in the primaries, in the debates, in the conventions, in the general debates.
Why is that going to impact the stock's performance?
Well, I think your question is, why didn't it impact it in the year 2019? I think that's inherent in your question.
It was the biggest punching bag in tech.
And it mattered in 2018. It didn't matter in 2019. The derivative of that is you can't just say because it's going up, it won't matter in 2020. Look, I will say this. I'm in Alphabet, which also faces similar regulatory concerns, similar privacy issues. But my feeling on that is, number one, the issues are less, and also Google has good momentum right now that as soon as it turns, I'm probably going to be out of it because of these regulatory concerns. Bottom line is this. It's a market, okay? We can say, and some of us on their desk are saying, we don't think it's going to matter, the regulatory concerns. I'm on the other side of that trade saying it is going to matter, and for that reason, I'm not owning Facebook, and when Google's momentum turns, Alphabet's momentum turns, I'll be out of that as well.
What I'm trying to suggest is the tell in that
is the price
may
action?
very well be the fact that it hasn't mattered.
Right.
And why is it going to start mattering now if Elizabeth Warren talks about it more on the stump?
It did matter in 2018. It didn't matter in 2019. My point being is you can't derive from those two pieces of evidence that it won't matter in 2020.
The most interesting one is Amazon. For me in 2020, you look at Amazon, it got up to 1,900 last week. Now you've had an area technically to focus on to see if it breaks out. It's 1855 right now. Does it break out above 1900? We need Amazon to participate in 2020 in the FANG conversation, just given the size of it at
I guess. I mean, it was underperformed the S&P this year.
It was okay that it underperformed because you had Apple, you had Facebook, you had Microsoft performing.
Right, so as long as you have those continuing to outperform, why does it, to use your words, have to?
Well, let me say this. If we are going to have Apple perform the way we did this year again in 2020, we're in for a really great 2020.
Yeah,
okay?
I would agree with that.
But let's just say that Apple and Microsoft and Facebook have a little mean reversion and don't have the significant outperformance I need from Amazon to see some strong outperformance.